Hey, everyone. Welcome to What's Happening in Real Estate this week. I got Conrad Zerini with RE/MAX Escarpment, RE/MAX Niagara. And we got Brian Hogbin with Mission 35 Mortgages. And myself, Rob Golfi with RE/MAX, the Golfi team. So I want to talk about the Americans, man. They know how to do business. They know how to frickin' do business. You know what I mean? Like U.S. goes big with first interest rate cut in 4 years. Like, why are we taking the long road, which has not changed anything? And then the U.S., I mean, like, what the heck? Like, you know, so what I got here is that the large cuts occurred during the crisis. Now, forget that. The Fed expects rates to drop to 4.4 by the end of 2024. This is in the U.S. And 3.4 by the end of 2025. Real world impact. Business owners like whatever significantly affected by high interest rates and welcome the reduction. These guys, they know how to frickin' do it. I don't know what is going on. Why are we having such problems? Like,
because we're such babies and our economies are different. But you know what's interesting? Because it went 50-50 on this. Because a lot of them said if the Fed goes down 25 basis points, okay, that's cool. If they go down 50, the markets would have said, "Oh my God, is unemployment going to grow?" You know what I mean? Like that was what they were thinking, right? Because if they went 50, the markets would have reacted, and the markets reacted with open arms, which was something they didn't expect. But that's what they were looking at. They really count on the market. Like in Canada, our stock market and the market just really doesn't have any like it was like a blip on the radar screen. But they're very market driven. The market loved it. And that's what they were worried about, and I think they did the right thing. I hate this death by 1,000 cuts. It makes me crazy. I hate it.
It's insane. So
now that they did that, it puts our chance of a half a point in October up to almost 60%. So now they're talking because they did the big cut. They're saying the last odds I looked at almost has 60% chance in October for a half, but almost certainty for a quarter still. But we might see that big supersized cut then in October.
And then let it work. That's the American way. Let's do something and let it work. Let it work into the economy.
Let's get things rolling. It's insane. It's insane. So now the Feds in Canada, 30-year amortization.
Yes.
Yeah.
But they said they also announced that they were going to do something over $1 million purchase, but they haven't laid out the ground on that yet. Am I correct?
Yeah. So basically what it is for the mortgage default insurance, they're saying the first time home buyer, you're going to be able to qualify for, if you qualify a 30-year amortization, right? Instead of 25. So that's going to extend the borrowing power. But the big news too, going from 1 million to 1.5 million on what Canada Mortgage will insure. Now this is what nobody's talking about yet, because you got to remember, mortgage default insurance protects the bank, right? So when the bank lends out their money, CMHC protects the bank in case of default. And we haven't got clarity on this yet, but this will also affect renewals and refinances. Because if I had $1 million mortgage, like let's just say I bought a house for $1.5 million a year ago, I would have had to put down 20% at least. Get a mortgage at 1.2. If that mortgage is on the books now with a bank, it has the opportunity to be insurable now on renewal. What that means is this gives an opportunity. It's great for mortgage brokers too, because now a whole new market opens up for us with different lenders. And it'll be interesting to see how it plays out. But now a lot of these renewals can become insurable, which gives a lot of stability for the banks now. So this is a huge confidence booster for the market, huge confidence booster for banks to actually, have a little bit of breathing room on renewals and relaxing the money supply. This is really big news.
And inject more cash, because I think you're going to see people like that take money out. They're going to refinance and pull out more cash and do something with it or what have you. So that's going to be a whole different animal to the economy, right? That's but the problem is no one's going to have their house paid for.
No.
That's the only problem with this. It'll be freedom 105.
Question.
Yeah,
No kidding. No kidding. Question. Do you think they'll bring it down to 10% up to 1.5 million?
Yeah, I think.
Yeah.
Yeah, I think what you'll see is so how it works now is 5% on the first 500 and 10% over. So basically on let's call it 1.5 million, you'll be able to do a down payment. 5% on the first 5 is 25 grand. 10% on a million is 100. That's $125,000 down on a $1.5 million house.
Yep.
Okay, but the way it is now, it's over 200 and something thousand.
Well, it would be 300, right? If you bought for 1.5, you'd be happy with 300 grand minimum. So that's a huge. Like, I think. Do you guys think that'll be enough for first-time buyers or other people to say, "Hey, let's buy bigger, let's push the market up"? That's what the fear is.
I think that between that $1 and $1.1 million mark, it'll help. It's because there's that seller that wants to get $1,050,000 or 1.1. You know what I'm talking about, Connor.
Yeah, it's a number, right? I sold my house for $1 million. I netted $1 million. Right? So that's the thing, right? Yeah.
But I'll tell you something. There's a lot of properties that were worth $1,050,000, but they sold for $1 million because the buyers just aren't going to go over that million.
20%. Like they would go 999 because I can do an insured mortgage at 999. So I think
so Rob's 100% right. I think that 1.1. Look, if you look at the volumes of homes that are 1.3, how many homes are 1.3 million on the market? That's the cusp of it right there. That's a great move up sector for people. That's going to change. That's going to be a total game changer. Like there's not even a question.
Oh,
right?
Absolutely. You're going to, you know what now, will that affect that higher end of homes go up in price a little more?
100%. Yeah.
You know, you just can't slow it down. You can't slow it down. Now, I can't remember who I was talking to, if it was you, Brian, or whatever. Now, with everybody sitting and waiting on the market, we could have been talking about this last week. Everybody's sitting, waiting and waiting and waiting. Everybody is used to sitting and waiting for the interest rates to drop. They're not doing anything. Well, we know they're going to do another quarter drop. Let's see. They're waiting to hit bottom. Like if they do a 0.5 point next month, I think you're going to see the market just thrive for the next 6 months. I think so.
I think
I don't know.
I think you're going to get almost like a double cohort of buyers because now you just pushed everybody to wait till December 19th or December 15th whenever this gets put in, right? So now a whole bunch of people are going to wait till December to buy because they're like, because now every single mortgage broker is going to be doing 2 pre-approvals. If you buy now under April, it's this. If you wait till December, it's going to be this. So now you're going to have a whole bunch of people waiting, and we're going to see. We're going to see at least 2 more rate cuts, whether it's a half and nothing or a quarter and a quarter. Like I think a lot of people. I think it's going to be a very good market come the new year, like January 20th.
And that's why I say buy today. Like your opportunity, the T-shirt that I wish I would have bought in the fall of 2024 is going to be a big seller. Because because what you said, to your point, that little marginal 1.2, that's going to start to ease its way up. People will get financing. It's not going to be as restrictive anymore. And I think it's going to take off like a rocket. And I think right now, if there's stuff for sale now, do it now, man. Beg, borrow, and steal to get that down payment. Do a 2-year mortgage, refinance and pull it up, and pay your parents back.
I agree. Because if you're a buyer, you've got opportunity, you've got choice. You can look around because of the days on market, the inventory that's out there right now. But I don't think that's going to be the case in the new year.
Right? No. Do a 1-year mortgage. And pay your parents out. Refinance next year, right? Take out the money, put the 5% down, take out the money, give your parents the money, and you're done.
That's it.
It's the way to go, right?
But okay, now here's another thing. We always know the spring market. Usually, sometimes it starts February, sometimes it starts in March, but it's around that time. February is kind of like the start of the early spring market, and then in Niagara it goes into March, April. But in the Hamilton area, it starts. I pretty well almost bang on every year. It starts in February sometime. when the market starts kicking in.
Yeah.
So
depending on the weather, if we got crappy weather, it gets extended. But you're right. Yeah.
Depending on the weather. Now, do you think we're hurting ourselves, them doing this slow interest rate drop, that they're going to stir up the market too fast, too strong? Like, get it rolling now. Like, I still don't think it's affected the market with the 0.75 reductions it's done. Brian, are you getting a lot of people coming in?
Well, I think people are testing the waters, and it's just like when rates went up, everything has a lagging effect, right? I have a variable rate mortgage. It went down a quarter. It doesn't take effect till the first of the following month. So technically speaking, I'm not feeling anything for 60 days, right? Like, so this whole rate drop by a quarter point, it's lagging even longer to feel the effects.
Yeah. Well, but homes dropped in July. If you take the July number, in July of 2022, homes dropped 10%. So it did affect the psyche. And I'm with you, Rob. I have a theory. The same thing with the stress test. We lost 18 months of good activity. The government came in, they intervened, and then all of a sudden, whoosh, like this. And I think you're going to see the same thing every time they do this kind of thing. Rob, you're 100% right. It's just going to be this whoosh again, and we're going to be back where we were in the Q1 of 2022 real fast.
Yeah. If they do another quarter drop and slow this thing down, I'm telling you, the spring market's going to be insane. They got to get this relief now. Get people buying now. Yeah. Not this constipation of buildup next year. You know what I mean?
True. Yeah.
And if they don't do that, they basically didn't achieve what they want to achieve.
I think a half a point in October would get the early adopters, the ones who see the opportunity, get them off the fence, end of fall. It would push you a little bit, but to your point, Con and Rob, for sure, you're gonna have a bottleneck come February, March.
Huge.
100%. Yeah.
So.
Huge. If you're a realtor right now, you got to get like a 7-month listing contract signed, because if you don't sell it now, you want to get it. You're going to make it for the spring market. But I don't know. You know what I mean? Like, are they listening to this podcast? Does the government listen to this podcast? Should we?
I wish. I wish.
Like, Rob, send it to Tim.
Yeah.
I mean, as you know,
here, Tim.
We are in the trenches. We're in the trenches. We are working with the people. We know what they think. We know what they feel. We know how they are. And those guys are in the ivory tower saying, okay, here's what we're going to do. Okay, 1 quarter, that's it.
But they don't have to go too far, because, the U.S. didn't even have a stress test, and their prices moderately went up. And as a matter of fact, today, most Americans, 90%, 99% of Americans are not underwater with their value. You can't say that about Canadians.
Yeah.
You know that, Rob, right?
Yeah.
So that intervention that we did screwed it up. These guys go up 50 points. You know what? You're going to see the tale of two countries. How are they going to make it out of this? Is there going to be this nice, calm demand, steady stream of demand? Or in Canada, we're going to see that whoosh in fucking February, and then we're back to, again, like I said, 2022, Q1 of 2022. It's a runaway train.
We didn't talk about the inflation number too, because inflation came in. Finally, like they were talking 2% forever, and it came in at 1.95. And something to remember too, if you back out the exorbitant cost of mortgages, inflation's actually at 1.2, like 1.
Yeah.
You know what I mean? So it's like we're tanking it down so quickly. So, a half a point, you could probably drop a half a point in October, and it still might not be enough for people to like feel the fire.
Yeah. But it'll definitely help. I think people will jump in for sure with a half a point. I'll tell you, we got about a minute left. So if there's another election brought in, the next prime minister, chances are he's going to come into as the start of a good economy starting up again, right?
Yeah.
In the U.S., I think Trump he's got it made. He had a good economy on his 4 years that he did. Then Biden went in on a shit economy. If he gets voted back in, it'll be a good economy. He'll be known as the world's greatest freaking president. That, you know what I mean? Like during his term.
It'll be first time in history where that, you never seen 8 years of a great economy. There's always cycles, right?
Yeah.
This guy, I always say your best day is your worst day, right? The fact that he lost the last election was his best day.
Yes.
Right?
That's what I'm saying.
Was good.
He's going, thank God I didn't have to go through those 4 years of terror. So,
I love you, Rob. That is awesome. That is awesome.
Anyway, guys, listen, I appreciate you being on, and we'll catch you next week. Thanks for being on.